Hello YouTube, it's a faceless man, and today I have a good video for you guys. This will pretty much affect new investors and kind of the way I would approach it if you're a new investor. Okay, so today I'm going to give a stock recommendation. Now again, it's not a professional advice that I'm going to be giving you. It's just a suggestion, a stock that I've been doing some research on, a stock that I've done, I've played with before, and I've kind of, had some good returns in it. So again, it's a suggestion. It's not professional advice. It's just a suggestion. So you guys, please do your research before you jump into it. Okay. Now I'm going to be doing this for the sake of you guys, so you guys can see, how I would do it if I was a new investor. Okay. I'm going to tell you a little bit of the math behind it. And again, you don't need a lot of money to start off, especially here in Robinhood. It's a good way to actually invest. So again, use the link in the description down below to get free stocks if you're new, if you haven't used Robinhood before. So let's start it off. All right. So first of all, I'm going to start with the stock. Now, these stocks that are here, I do have them, but I'm going to sell them off. So yeah, I'm going to be buying more of this stock, but now the stock I'm going to recommend here again is Gain. This company is Gladstone Investment. They do pay a dividend of 8.269, which is about 7 cents per month. They do pay a monthly dividend. They are increasing it. They have been increasing it for the past about 5 years. So they're doing fairly well, as you see. They're usually up in their expected value and their earnings. So I'm going to give out a quick, mathematical situation here. Okay. So for this one, I have a buying power of 321. Again, that's not a lot of money. I understand that. So with the buying power of 321, as you see here, I can actually buy, I would say 30 shares. I can buy 30 shares at 10.41 at this price, and I would end up, let me do this, at 312. So at $312.30. Okay. So again, see this, at this price, I can buy 30 shares at 312 with my buying power at this price. Okay. So I want to do some quick math on that. So with those 30 shares, I'll be getting $2.10 a month, which leads to $25.20 per year, right? This is per month, and this is per year. Okay, so with this $25.20 per year that I'll be getting, I could just leave the stock like that. Of course, this price is going to fluctuate. Okay, you have to understand that this price is going to fluctuate, so my portfolio is not going to be the same value. It could be higher, it could be lower. But again, at this price, I will be getting $25.20 per year. Now, with this $25.20 per year, by the end of the year, when I get this profit, I can save it, and then I can buy 2 more shares. So I'll be, instead of being at 30 shares, I'll be at 32 shares. So as you see, there's already a momentum going. And then if I keep it for another year, it'll move up to 35 shares, So this eventually, without adding any money, it's going to keep growing and growing and growing. It's going to keep going up and up and up, right? So that's one of the ways you could invest. If you don't have a lot of money, you could invest like that without putting any money in it, just leaving it there. It could keep up with inflation. It could keep growing, and you can keep buying more of the same shares. And again, your profit will be going up. Now, the reason I'm giving you this recommendation right now is because this stock is going to have its ex-dividend date on the 19th. So on Monday, they're going to have an ex-dividend date, which means that the stock is at a high point right now, and it's most likely going to end up going down, because after the ex-dividend date, once people that are dividend capturers, which means that they buy the stock, like let's say Friday it had a good day, as you see it went up and it stayed up, is because people are going to capture the dividend on Monday. So once they capture the dividend, they're going to jump right off, the stock is going to go down, and that's where I'm going to buy. And that's what you want to do whenever the stock price is coming down. That's when you want to buy, especially dividend stocks. And stocks at this price that are fairly cheap, that pay a good dividend, usually tend to come down after its ex-dividend date, because that's when people capture the dividend and just jump off. So that's where I always come in. So every time you keep getting your profits and you're going to buy more of the same stock, then I would say just buy more. So if you pay attention to the stock, just keep an eye like on the week, month, 3-month, and see where its lowest points are, and let me give you an example. As here, you can see its low points. So as you see, every time it has a high point and then it drops, it happens often. So, it's a predictable stock. If you already know it, you know when it's going to drop. So you always have to find these little points that, these points here. You always want to buy when it's coming down. See, as you see here, it came down and it dropped down, but again, you can make your profits there. So always pay attention to the stock before you jump into it. Honestly, I would say do some research, look at its complete history and see its pattern, because every stock has a pattern. Now, it doesn't mean it's going to be consistent with its pattern, but they're well within a pattern. So I see this stock has been up plus 25.56% in the past year, which is pretty good for this stock, especially the dividend it pays out. So it is a medium volatility, but again, guys, I would recommend you guys jumping into it. Check it out Monday, Tuesday. That's when the stock, I'm pretty sure, is going to be down. If it doesn't go down, then I still think it's a good investment. But if you're a new investor, you can slowly learn like this, and you can slowly see how the pattern works. So again, thanks for watching the video. If this video helped out, please like, share, and subscribe. If you have any questions, feel free to ask, and I will answer as quickly as possible. So thank you for watching, and I will see you guys in the next video. Peace out.